All right, welcome back to the Future Proof podcast. Today we are talking about financial risk. Today I am joined by Terrence. He is the CEO of Oversight. It's a company that helps finance companies with audit, risk, and detect fraud, errors, and policy violations. So, Terrence, thank you so much for joining me today.
Hey, thanks for having me, Alex.
Yeah, absolutely. So, we talked a little bit about what you guys do on the podcast or before the podcast, but why don't you tell the guests what does Oversight do and kind of how do you help your clients?
Yeah, I would love to. So Oversight's a financial risk intelligence platform. So we help organizations, particularly large enterprises, manage, monitor, and analyze their corporate spend. And maybe the best way of thinking about that, Alex, fraud, waste, and abuse is a big topic in the political conversation these days. And certainly, without getting political about it, we do the same thing for corporate enterprises. So CFOs that are intent on making sure that the corporate dollar is being spent in rightful and useful manners. We'll use our platform to help do that analysis, build not only a level of comfort around how they are using corporate dollars, but ideally better practices and policies on how they can manage it going forward.
So now are you helping them prevent fraud from exterior of the company, like people, committing fraud against them, or is it also internal?
Yeah, it's a mix of both. It's interesting, the founding roots of the company actually came out of the network security space, and much of the network security paradigm, especially 20 years ago when Oversight was founded, was built to protect the enterprise against internal actors, right? So most typically folks that would have access controls or the ability to do bad things on corporate networks were typically your employees who had credentials of some sort. And that was certainly the founding principle of Oversight in terms of solving the financial risk problem as well. And we continue to see that as the paradigm. So most bad actors, if you will, are folks that are willing to do risky things with either corporate credit cards or corporate assets, especially financial assets, typically are inside, but not exclusively. So we do see things like business email compromise or fraudulent invoices sent in by vendors looking to get paid. So it very much has become an external landscape as well that we're trying to protect organizations against.
Got it. Yeah. Don't want to get political. Maybe you guys could have helped out Minnesota quite well.
Perhaps might be
For
bigger
sure.
than a bread box there.
Yeah. The only reason why I joke about that is I'm actually currently in Minnesota, if everyone doesn't know that. So fun there. But all right, well, cool. So we just kind of went over why you guys built the company and where you saw the problem. So why were traditional audits and internal controls no longer enough to kind of catch that? Why did you guys think that this was something that you guys could fix?
Yeah, probably a couple of reasons looking back. One was just the state of technology as it existed 20 years ago. So the ability to use, especially AI-driven approaches, which are just significantly more effective, much more scalable for analyzing large volumes of transactions, obviously didn't exist in the same nature that they do today. But as well, I think it's part and parcel of just the evolution of where CFOs have put their focus. So 20 years ago, they were really looking to automate core processes, implementing the large-scale ERP platforms, really getting, I'll say, financial foundational components in place in their tech stack. Obviously, what they're looking to do today is be much more focused on more specific areas of either process improvement, compliance, and certainly the area of managing spend is one that technology is now very well suited to assist with. So I think it's just been an evolution of thought process, investment priority, and certainly the technical capability has come a long way.
Why do so many organizations still rely on that manual review process?
Yeah, it's a rather, I'll say, amazing circumstance that still exists in most large organizations. So, what Oversight does in terms of automating that audit and analysis, it's very much still in the early adopter phase when we think about the large enterprise landscape. And again, I do think it's just an evolution of business process. So, the way that most finance organizations have thought about efficiency over the last number of years, they first looked to outsource, then they looked to offshore. What they're looking at now is how do they automate? So it's really been an evolution of the investment picture. But along with that, as I said a moment ago, the capability of technology today to actually solve the problem in a much more holistic way is still fairly new. So that investment movement to get away from manual approaches, to get it out of just, I'll say, body shopped offshore locations into a much more effective approach is still an early adopter model that we're having a lot of success helping organizations evolve around.
Got it. Okay. What types of fraud and waste or errors are most commonly missed by those old legacy systems?
Yeah, it varies. First, maybe I'll give you a perspective on the sorts of things we analyze for organizations. So typically we're sitting on top of I'll call discretionary spend processes, and most typically direct spend for organizations. So think of it as travel and expense programs where you have potentially thousands of cardholders out with a corporate card and capable of deploying, I'll say, corporate dollars in a very discretionary and free-flowing way. What are those processes? For a lot of our organizations, those are very large spend areas. For many, it's north of $100 million a year that flow through those travel and expense type programs. The other big area of spend monitoring that we do is on accounts payable processes, so procure-to-pay processes, right? And for most organizations that we deal with, those are multi-billion dollar spend avenues, right? So we're dealing with organizations with a lot of transactions, a lot of potential financial risk. So the things that we're typically looking for in travel and expense, it's adherence to policy. So, most large organizations have a spend policy that they want employees to adhere to. So we're helping to ensure that those policies are met effectively. And we're looking for where employees stray. And they stray for any of a number of reasons. Most employees are good employees. They don't intend to do bad things. They just might not be as up to date on the policy as they should be. But unfortunately, there is a portion of the population that willfully and intentfully does bad things. So we're looking for those bad things in the travel and expense spend, again, to change behavior, to help manage the spend, to reduce the total amount of spend, and where necessary to identify the folks they're doing things that border on fraud, negligence, or other bad intent.
Yeah.
In the
Yeah.
invoice world, it tends to be a little bit different in the invoice world, Alex, right? Typically a large enterprise is processing hundreds of thousands, if not millions of invoices per year. And their AP processes obviously in effect turn around and pay those invoices. So what we're typically finding on the AP side is more of a process control, right? So travel and expense is more of a behavior control. Invoices is more of a process control. So
Got it.
fat fingering payment amounts, issuing duplicate payments where the money then has to try to be recovered if you identify it in time. But there is a fraud element, within that as well. So I mentioned business email compromise earlier. That's something we help organizations to identify and manage fraudulent invoices coming through the AP processes. Even cross-process analysis. Like, so for some organizations, they'll have an employee pay one particular invoice with their company card, but then they'll still get an invoice through the P2P process. So, they'll essentially go out through both channels. So we help organizations manage that sort of process quality as well. But that's a flavor of the sorts of things that we're identifying.
Okay. So fraud, risk, also helping them streamline things, save time, kind of limit all that stuff. So it's good. So now with obviously digital payments have been around for a long time. Automation starting to come into the mix a lot more. And then also after COVID, that remote work has increased a lot.
Yes.
Does that impact that financial risk a lot, or is kind of what are you seeing there?
Yes, it had a huge impact on the risk profile for organizations in two different ways. One was certainly employees in large scale working out of their house are unmonitored employees, right? So they went from a fairly monitored, regulated environment, if you will, to one where no one was looking over their shoulder. So with that, you get certain types of risk behaviors that start taking place. And we certainly saw that in changes in spend patterns during the COVID era. The second thing with COVID, quite frankly, a lot of organizations gave employees a bit of carte blanche to build their home office, to resource their their new work location in a way that they needed to be effective, whether it was buying additional computer equipment, monitors, office equipment. So that in itself was a very unique spend pattern for organizations that became something that needed to be monitored very closely. The other thing that we saw during COVID, again, on the invoice side, there were massive challenges with supply chains during COVID. So you saw a lot of organizations really diversify their vendor lists that they work with, introduce a lot of new vendors into their AP process that might not have been either known, as well vetted, or as consistently purchased from in the past. So it created a new vendor profile risk that we had to manage very closely for a lot of our organizations. So COVID was a game changer in a lot of ways for corporate spend and risk.
Interesting. Yeah. I mean, I didn't even really think about the kind of the remote work aspect of that. I mean, obviously the automation part of it is a little bit more of a, intricate thing too as well. But that, kind of the tendency of, human error is something hard that you guys can come in and solve it pretty quickly with all of your algorithms and kind of knowing other behaviorals from other companies and apply it to your clients. But if a client doesn't have that kind of history and knowledge from other companies and they're just looking internally, it's really hard for them to probably notice those patterns, right?
It is, yeah. And it's one of the things we've focused on quite a bit in the last couple of years. So as we've built out our machine learning models. So if you think of machine learning, essentially what we're doing for organizations is creating a baseline of normal for them, right? And not only over their for their own patterns of spend, but comparing their patterns to all the other customers in our portfolio so that there's a broad understanding of what normal looks like. So as we deploy our technology, essentially it's deployed out of the box with a baseline understanding of what risk looks like, so that the learning process for any individual client is much quicker.
Okay. All right. So now to bottle this all up and give, someone that's listening a really good idea of kind of what you do at kind of a higher level. So what does like modern continuous financial oversight actually look like in practice?
Yeah, so we're part of the financial tech stack for the large organizations that we work with. So if you picture core source systems, right? So they're ERPs, think of Oracle, SAP, Workday, or their core automation platforms. So think of SAP Concur, other like travel and expense processes or platforms. So Oversight sits on top of those source systems. And for most organizations, we're the only point where all of those transactional behaviors come into a single point of analysis. So we act as a control point. Again, to use the network security paradigm, we're essentially the spend firewall that all those transactions flow through, right? So we're providing that single lens of visibility, that intelligence layer, if you will, for analyzing all of that behavior and adjudicating what looks anomalous and what looks within normal bounds.
Got it. Okay. So now let's go into someone trying to adopt this system or kind of any other system, like it. When the finance team is actually evaluating solutions like Oversight, where do they usually get stuck? Like kind of what is like a bottleneck for them, kind of, or what is like an issue or a, kind of an objection that you guys have to overcome?
Yeah, there's usually a couple of keys to our sales process, and I'd say that this is an evolving picture, Alex, as organizations are becoming much more, I say knowledgeable in a good way, but curious as well in terms of how AI actually works, right? So I'd say that the normal components of the sales process, right, is convincing them they have a problem worth solving, right? So again, for most organizations, they continue to do transactional monitoring or audit in a fairly manual sample-based way. So part of the sales process for us is making sure they understand there's a significantly better way to do it that broadens the scope, allows them to analyze all transactions simultaneously in near real time, apply best practice machine learning models for identifying risk, and then giving them a great tool set for actually remediating or workflowing the solution set, right? So it's a bit of a process understanding that really have to grasp as part of the sales process. There's, certainly a business case element of the sales process. So if I do this, if I automate and put it in a technology like Oversight, what am I going to find? And is it going to be worth the squeeze? And the good news there is we've yet to come across a client that didn't have a problem we were capable of solving in a very financially beneficial way. No matter how good you think your controls are today, our technology will find things you can control even better, whether it's behaviors, whether it's errors, whether it's fraud and abuse. The financial outcome is very positive, but there's a reasonable business case that clients are looking for to have built there. And then the third piece, as I mentioned, is really an evolving piece. There's a lot of scrutiny and desire for organizations to understand how AI models work, right? So part of that is a privacy question, part of that is a transparency question, but I think all fair ones to understand from your vendors in terms of how they manage their models, how they prevent model drift and those sorts of model strays that become difficult to explain to a client, but are certainly important for understanding, especially in a process like audit, where you're making decisions often about areas of gray, and you really want to understand how the technology is adjudicating those sorts.
So I talk to a lot of like cybersecurity IT companies, MSPs, things like that. So, and we talk a lot about, AI and the risk that it has for their clients and adoption and, their employees going out and, using ChatGPT and putting sensitive information into there and all that good jazz. But it sounds like with Oversight, the AI system is it's like obviously internal, it's the basically you said that it installs over all of their systems. So you guys really don't have that. It's an enclosed system, correct? So you're not really, transferring or, leaking any of their information.
Absolutely. So we certainly do leverage machine learning models, which aggregates anonymized data from across our client base to do model building and analysis. But for any particular client, the good news with what we do is, there's very little demographic or PII data that's required for us to do our analysis. We're looking at financial transactions. So it's fairly homogeneous data. It's very financial. There's very little concern about bias or model stray relative to demographic, which is often a question relative to privacy, GDPR, and other things, right? So it's a pretty clean audit evaluation. Again, very transactionally focused and very, I'll say, independent of things that might influence models or be concerns about model influence.
Yeah, that's good. So you're not really even obtaining any kind of sensitive information. You're really just kind of getting the history of the transactions and looking through numbers and stuff like that. So,
That's correct.
all right, well, cool. All right, well, here's kind of a fun question. So, if you could eliminate one financial risk blind spot for enterprises overnight, kind of what would that be?
Interesting one. Okay, so let's think about this one out loud. So, the blind spots that organizations typically have, right? Again, on the behavior side, on the travel and expense side, you want to trust that your employees are good stewards
Yeah,
of dollars. And like I said, most do, right? So when we profile organizations, 70 to 75% of employees do almost without exception what's right by the business. You have 15 to 20% who need to be educated or trained on what policy is, or reminded of what good looks like, right? And then you've got that 5% that tends to be the risk profile that drives most of the loss or most of the risk for the entire organization. The blind spot for most organizations is who sits in that 5%.
got it.
So again, part of what we do with baselining normal behavior, not only for an organization but across profiles across businesses, is help organizations identify the people that need to be paid attention to. And again, we do that in an agnostic way. It's based on purchase behavior and patterns of submission. But we make sure that an auditor's time is spent on what's worth doing versus taking a fairly peanut butter approach to try to analyze everything, and oftentimes not finding anything worth looking at. So the blind spot is for most organizations is what's worth managing through your audit process.
Got it. Okay. Yeah, that's interesting. That was another thing that I really never even thought about with I've used to be in the corporate world for a while and I used to have kind of like that expense, allowance for travel and stuff like that. And I remember back into, maybe even like, having a dinner or whatever, and it's, hard for you to really kind of know like what you were spending or if we were overspending at dinner. And I always kind of thought like how they manage that. And, maybe this is kind of maybe it wasn't around then, but that's awesome that you guys can really help kind of look at the picture as a whole and identify those problems in there and fix it. Or even like you said, a lot of people are probably not doing it maliciously. It's probably just a lack of training and or maybe just ignorance to like how big of a deal it is. You know what I
It
mean?
is, yeah. So it's a lot of policy reminder, but we do get the occasional people that try to pay for their weddings through their corporate card, that buy
Okay.
themselves
Yeah,
Christmas gifts through their corporate card, buy their
got it.
engagement rings through their corporate card. So you'll be surprised what we find in there when we start digging into it.
So you're not talking about getting the T-bone over the sirloin or something like that.
Exactly. Yeah. Yeah. The fun stuff usually rises to a more significant level than just the
Sure.
T-bone versus the sirloin.
All right. So if a CEO or an audit leader is listening today and they could take one step this quarter to reduce more financial risk for their company, what would you tell them to do?
Yeah, very clearly it's automate the process. So, again, the benefit of using a technology like Oversight is you move your sample-based audit that is typically manual and almost without exception doesn't find anything worth looking at into entirely 100% monitored process built off of an intelligence layer that understands what risk looks like, all for sake of, at a minimum, providing a mental level of comfort for a CFO that they understand and can attest to the quality of the controls that are part of their financial process. And so every CFO, especially in a public enterprise, signs off on their SOX attestation that they understand a control environment, that it's effective, and that it's consistent. So for those CFOs, having a platform like Oversight as part of the monitoring exercise, they'll be able to put their name on the dotted line there with a significantly higher level of comfort from an attestation standpoint. But importantly, we'll also be making a pretty significant impact on the organization in terms of understanding where dollars are going to, how to reduce them in totality, and make sure that the risk profile for the business is one that is of high quality to shareholders, to other investors, and to the employee population in general.
Interesting. All right. Well, awesome. Well, Terrence, if someone's listening and they want to talk with you about maybe adding oversight to their tech stack, what's the best way to get in touch with you, the company? Kind of how are they going to go about doing that?
Yeah, we'd love for folks to research a little bit more about what we do. So oversight.com is our web address. We've got some great case studies up there of how we work with large organizations. There's an impressive list of clients that are part of our portfolio and make for great reads if you're interested in understanding how you can automate your own audit process and help manage risk for your business. So, look for us through that. There's opportunities to sign up for demos, see us at trade shows, join our webinars. So a full list of marketing calendar events that allows you to get educated on not only what we do, but what the possibilities are for technology for your CFO organization.
Interesting. Well, thank you so much for joining me. It was a pleasure today.
Likewise, Alex, thanks so much.
All right. Thanks so much. Bye bye.